All
right, so let's start. So today we have RJ and Stephanie here. They are going to give us our mortgage update because we see so many things changing now, lending wise. You know, we do see that there's still people wanting to buy, you know, and sell, but the guidelines have changed when it comes to loans, right? So we want to make sure that we're up to date with the latest information about what has changed, what new guidelines are out there, what's going on in the lending industry, and how can we inform it. So welcome, RJ and Bethany.
Hi, thanks for having us on.
Hi, ladies. How's everybody doing? I hope everybody is super safe. I'll let Stephanie kind of kick it off, and then I'll just go ahead and go into what we're doing and what are the changes. First and foremost, we want to make sure that everybody's safe. It's a very, very, very trying time. It's a very unknown time to what we're dealing with. I know that some people on this call might be a little worried because this is your livelihood and this does affect you on a daily basis. But listen, everything bad, there's always good out of every bad, there's always a good situation. So I'm going to go over a little bit more of the technicals on what's happening. But first and foremost, listen, we want to make sure that everybody's safe. We're taking the safety precautions that we need to. If you guys are showing homes, please take the necessary steps to protect yourself. You never know where somebody's going to be at. You never know who they're hanging out with. You never know who, it's just, keep yourself safe. The money will come. The deals will close. And I'll go ahead and I'll tell you guys from a, technical standpoint as far as a transaction between underwriters, processors, and guidelines, and then moving forward where I think we're going to go ahead and be as a lender and for you guys as realtors as well, okay?
We have a few questions for you that we want to specifically ask, and then if we are not mentioning something that we should definitely know, please feel free to.
Yeah.
So I think Banna has the first question for you.
Yeah. First before Banna goes, how many have gotten an update from another lender? Okay, so you've got 1, 2, 3. Were they direct lenders or were they just mortgage brokers?
Yes,
Direct.
Direct.
So do they service the paper?
That would be a good thing to explain too, what the difference is in between a direct lender or not. What is the whole issue, how do they operate and operating?
Yeah.
How do you determine that, right?
Right.
Yeah, so there's multiple changes on multiple levels on different scales when you're talking about, who actually gives out the loans and why guidelines are changing and why for example, any government-backed loan is going to change. Any conventional loan is going to change. Any investment property. For you guys in Miami, everything is going to change just because of the loan amount and what you guys actually are able to lend. So the worst thing that I would want for you guys is to go out there and then show homes when on the top, if your loan officer, whether you use us or not, which hopefully by the end of this call, we could go ahead and switch you over to us. You really need to know if your guy knows exactly what he's talking about and if he's updated on a daily basis. They're making you go out there and show homes during a pandemic. And if they can't get qualified, you guys are wasting your time. So we want to make sure that all of these things are being covered for you guys. So that way you're safe. You're going to close your deal, and it's actually a deal, and it's not a dead deal, which we're actually scrubbing pipelines right now because that's a big change. A lot of the changes are huge.
Right.
Okay.
What's the difference in between the lenders, just so you can finish with that?
Yeah. Go ahead, Banna. What's your question?
Yeah. Hey, RJ. So, I mean, you pretty much were about to just answer what I was going to ask. I like how you talk about Miami, as that's what affects me directly. To answer your question previously, I work with lots of mortgage brokers, and my biggest what I've been noticing these days is that they've been difficult to just talk to. Even they haven't been answering a lot of our clients, right? They've been like 2 to 3 at this point. I've been kind of like, and they've been like AWOL, that we can't really find them. They don't really know. So that's first off to answer that question. Second, Yeah, so tell us about the guidelines that have changed. I mean, are we still able to do FHA? I know that like perhaps people with low credit scores is going to be difficult. So I know that jumbos, there's a lot to talk about. So
there's a lot. All right, so I'm going to go ahead and I'm going to go step by step real quick. And I'm going to go ahead and start this conversation out with mortgage brokers. Mortgage brokers is probably, if this continues and this pandemic continues to get worse and it doesn't get better, you're going to start seeing a lot of small banks go out of business. Okay. Now I have to tread around this lightly just because, and the reason why they're not picking up their phone is because they can't support what's happening. They can't continue to lend. Let me go ahead and explain what the mortgage broker does. They go ahead and gather the information, and they have maybe 6 or 7 people that they could go ahead and send deals out to. Now, if that bank is not buying any of the paper, okay, what does that leave that small bank? They're on what's called a P&L, profit and loss. So where they start making their money is on government-backed loans. That's the easiest way that they could sell the paper. Okay, so now if it's an FHA and FHA is holding their deals, so for example, anybody with low credit scores, right, they're not going to be able to go ahead and provide that service. That's why you're not getting them on the phone, because they might not be in business. They might not even know what's going on because they have to wait for somebody else to go ahead and provide the information. That's why it's very big. Listen, even big banks like Wells Fargo, Bank of America, they changed their bank guidelines. They have to have a minimum score of 680 to go ahead and do FHA deals. They don't want to service the paper, okay? A lot of people are becoming furloughed, right? So they're not getting fired, but they're not going to continue to work. They're giving them that time off without pay, right? So any bank, their thought process is, I'm not going to go ahead and give somebody a $300,000 loan if I know for the next 3 or 4 months, they're not going to be able to pay it. You see what I'm saying? So they're going to raise the credit score. So on our end, across the board, so you guys know about a little bit, let me go into the guideline changes. So across the board is going to be 660 credit scores. It does not matter if they're 650, obviously there's a little bit of leeway if they're very close to that 660. So across the board, FHA, VA, conventional, any investment properties, 660 scores and above. That's one of the biggest changes. Okay. Now, if you guys have a contract that's under contract, some banks might kill that deal. For example, I was just having a conversation with Gabby. Any non-qualified mortgages for nationals, for Miami, for my people from Miami, this is huge for you guys. Nobody's giving deals out for non-qualified mortgages. So what falls into place? For nationals, bank statement loans, any hard money. So investment properties are going to go and take a really big hit. Okay. So any of those things are a day of the past. Will it come back and will it continue to be a thing? 100%. Do we know when? We don't know right now, just because it just is what it is. Okay. We're anticipating everything to kind of rebound as long as we kill the curve on the coronavirus from 3 to 4 months from now. As far as those kind of deals, we're not killing any deals. What we're doing is we're extending out as long as the contract or as long as the seller is okay with doing that. If people are furloughed, if they lose their job or whatever the case is, we're not killing deals and we're honoring, the lock. We'll do the extension of the interest rate and all that other good stuff. Okay. That's a big change. So 660 scores and up. Jumbo loans, anybody that do jumbo loans, done. There is no, loans above, especially in Orlando, anything above the loan amount of $510,000, there's no jumbo loans anymore. They don't want to service paper that they're going to have for a long time at $600,000-$700,000 if, people are losing their jobs. It's just where we're at right now. Investment loans. This is the really, really big one. If anybody, for example, I have a lot of deals like this. Let's say, for example, you have a client that is leaving they make good money. They're leaving out of one house and buying another one, but they want to rent this one out, right? That's what we call vacating rent. Okay. Now, when you have multiple properties, you have to have what's called months in reserves. Now, it's not money that they actually have to spend at closing, not towards down payment, not towards the closing costs. It's money they have to have in a pot in their savings account or whatever account in order to cover the monthly payment for a certain number of months, okay? 6 months is the minimum, okay? If your client has 3 properties, 3 rentals, okay, and you're using their rental property to qualify them on income, you have to take that payment, times it by 6 for each property. All right, does that make sense? So for example, somebody has 3 rentals, okay? And we're using all that income to qualify for the new property, okay? They have to have 6 months of what we call PITI, principal, interest, taxes, and insurance. 6 months of their payment for each property, okay? That's huge because a deal could die. If you don't have enough money in your account to cover all of those payments, you guys have to understand, most of these people have tenants in their property, and most of them are losing their job or getting furloughed. So the bank is looking at it like, okay, if that tenant loses his job and they're not making that payment, somebody has to make the payment. So they're relying it on the buyers. It never used to be like that. That's a new guideline change. All right, and that just happened on Monday. Super, super, super important that everybody understands that, okay? So 6 months each. Very important, guys. A lot of the interest rates on FHA deals, this is another guideline change. If your score is mid 6s, so 660 and above, they're gonna be tacking on origination charges, which is just a part of the closing costs, okay? Make sure that either your client, my recommendation is to do 35 to 45 day contracts to give your client a little bit more time to save a little bit more money if the deal is very tight. That, or you negotiate a little bit more in closing costs. So on the norm, what realtors do is that they would go ahead and negotiate 3% of closing costs. Now, buyers really have the buying power because there's not all those off, even though we're super, super busy, okay? Now, as people start losing their jobs, offers start coming up the table. You won't have 4 or 5 offers that you're competing against. You'll have maybe 1 or 2, okay? Negotiate a little bit more on closing costs. Instead of 3%, do 4%. Now, your loan officer has to be very, very, very good, okay, like myself or Stephanie, to really calculate your actual closing costs so that way everybody's on the same page. Nothing is worse than getting to the closing, that's getting to the 3 days before closing, and then you have to find out that they have to come up with more money. It's embarrassing. It's really tough to go ahead and come back from that, and it's super stressful for everybody.
Are
Okay.
there no requirements when it comes down to how much can the seller contribute towards closing costs?
FHA is 6%.
6% is the max.
That's the max. You could go up to 6% FHA. 3% is conventional.
3% conventional, 6%.
Now, there's a little trick that we normally do, okay? As far as the conventional that we've done, I don't know if I could say this, but if you guys want to know the little trick outside of closing, there's a way you could get more closing costs on a conventional other than 3%. Okay. That's pretty much, as far as the guideline change, there's much appraisals. So you guys understand appraisals are a huge thing right now because people are not letting people in homes. Okay. So we have to do exterior only appraisals. What that means is be prepared when you're searching for comps and you're negotiating on your contracts. Be very mindful on what the comps are. But listen, everybody should understand right now we're in not normal times. This is not a normal time for timelines. It's not a normal time for appraisals. It's not a normal time for deals because it's a pandemic and it's very serious. This is really affecting the economy. Exterior appraisals, I'm starting to see a lot of appraisals come in short. Okay. Always have a list of your comps in the area prepared and ready. We might have to go through extra steps and extra hoops to jump through in order to go ahead and get the deal closed. You guys both know that a $20,000 short on appraisal, sometimes the deal is dead. It just is what it is. The sellers are not going to go ahead and cut into their net profit that much. So always have a list of comps ready and available, so that way we could go ahead and do a rebuttal of value. Okay. Now, a lot of appraisal companies are being a lot more lenient when it comes to that. And then the rebuttal of value, what we could do is we could have the client take pictures of the inside to send out to the appraisal company, and that would help out as well. That would help out the cost. Okay. That's a big one as well. As we continue to have conversations, I'm pretty sure there's going to be a lot more guideline changes that do pop up. Another one is self-employed borrowers. If you're self-employed, the IRS is not issuing tax transcripts anymore. They're put on hold, just like the extension of them filing for 2019 taxes, okay? So the way that we have to do it is we have to go ahead and collect a lot more information from the CPA, and hopefully that client's CPA or accountant would be able to provide us with profit and loss sheets, balance, K1s, the whole 9 yards. Things that we didn't really need in the past because we could just order the transcripts and it would come through. We would have to go ahead and jump a little bit through hoops. We have to be a little bit more professional, and our craft. This is going to make us better lenders, and it's going to make us better realtors anyway. You guys are going to learn a little bit more of the mortgage process as the guidelines change, but we all have to have the same communication, and we all have to be on the same page to get that buyer to the closing table.
RJ.
Yeah.
What about interest rates for the FHA conventional? What are we looking at now? Have they gone up? Are they going up? Because before we were using that, they're so low by now. But now where we at?
That was Bethany's question, Ben.
Oh, I'm so sorry. My bad.
So here, okay, so they're not bad. All right, with the whole 660 minimum scores, they're not that bad. You could still do 3.875, 3.99. You're still there, depending on origination charges, if they have the money to fill it. The mid fours is going to be where it's going to end up at. We have to be very good at switching them to conventional. Okay. The reason why you want to be really good at switching them to conventional is because of the appraisal. The appraisal, when you go conventional, they could go out a mile, right, to find comps. If you're doing FHA, anybody on this call has probably seen a whole bunch of FHA deals where the appraisal comes in low.
Yeah, and they only go a mile out.
Right.
They don't really open it up so much.
Right, exactly. So we need to be very, very, very confident. Listen, FHA is great. Don't get me wrong. It's an easier deal. The ratios are higher. If you have a client with income issues, you want to go FHA because the ratios, you're getting 7% more. But if you don't have an income issue, you want to switch them to conventional because it's almost going to be the same thing. Now, going back to the conversation on a direct lender and a mortgage broker. Okay, so you guys understand what this is. A direct lender, especially if they service the paper like we do. Now, I'm not saying you guys have to use us. I'm just saying if you have a big bank behind you, okay, and this affects everybody. I'm going to talk about two things. One, the different options when it comes to the rates and doing what's called pricing exceptions. And two, your underwriting turn times, which has a lot to do with your closing dates. So first and foremost, 21, 25 days closings are out of the picture. Literally, there is no possible humanly way that anybody could close a deal right now in 21 days or 25 to be that, because the appraisal companies are taking 2.5 weeks to get appraisals in anyway. They're really backed up and they have to figure out, if they can't go in the house, now they have to figure out how much the house is worth. So they're taking 4 or 5 days for a report. Okay. That's the first thing. So literally the underwriting turn times, we all have to be understanding that we're going to have to ask for extensions. If not, just ask for a 45-day contract. And if we could close before 100%, we'll close before. But there's so much. Title companies are stopping, they have to do mobile notaries, mail away closings. People want to do mail away closings. That's 2 days right there that we have to have things in before. There's a lot of certain things that we have to be able to do. Okay. Now, as far as the difference between mortgage brokers and a person that services the paper, the biggest difference is the interest rate. Because we're collecting money on the monthly payment, our pricing is different, meaning our interest rates are a lot lower compared to a lot of other people, okay? When people are on a profit and loss sheet, profit and loss means that that office has a specific overhead, and they charge their clients on the rate in order to cover that office. Now, when you have small banks going out of business because of the pandemic, you want to make sure that you're with a big bank that can supply the low interest rate, because we service $5 billion a month. Does that make sense to everybody?
Yeah.
I had to talk with my hands. I'm Puerto Rican. I apologize.
And also, by the way, if anybody has questions as RJ speaks, make sure that you're typing it on the chat box and he will address them. I think Tessa has a question for you.
Yeah, sure.
Hold on.
Hi, Tessa.
So I'm here in Arizona, so my market is a little bit different, but it's interesting to hear all about like Florida, because I know it's definitely a totally different market. What I wanted to know was more about like what kind of programs are being stalled or like not available in your area, because I know it's a lot different around, I know you kind of talked on it a little bit, but since it's different all around the nation, are there ones that you're seeing specifically that were on hold? Like in Arizona, we still have access to all of our down payment assistance programs and all of that kind of stuff. So I know, I'm sure it's not for long, but at least for the time being we do. So what do you kind of see as far as like expecting what's coming next with that?
Actually, that's actually a great question. I'll tackle down payment assistance because I know a lot of people do that. And when we live in Florida, unfortunately, that's just our medium income is that in particular. I'll tackle two things. So the programs that we are starting to see that are going away. So jumbo, right? I don't know what your limit is for jumbo in Arizona. That's the first one. The non-QM, so hard money. So anything that has to do with hard money or foreign national programs, they're done as well. When you're starting to see people with like no social security number, you know, they have a tax ID, something very specific to that, where there were interest only loans and all that other good stuff, gone. You know, you're starting to see differences on rental income. When people have rental income, they need more money in the bank. So the ones that are going away for sure, jumbo, non-QM, hard money, interest on like foreign national, all the stuff that are not regular FHA, conventional, VA, USDA, all of those, anything outside of that, it's in jeopardy. It's either gone or it's going to be nearly impossible to go ahead and get approved. So just think of it, keep it simple, right? Any of the regular stuff that you could go ahead and do that has to do with traditional W-2 income or bank statement loans, that's done, okay? Anything else that's just regular traditional, you're going to be fine with it, okay? I'm starting to see a lot of adjustments with self-employed borrowers, but you could still get that to close. You just need more information, and you need to be a little bit more transparent with more people, okay? The CPA, accountant, if they're self-prepared taxes on like, what's the thing where people do their own taxes themselves. I forgot what the name is. TurboTax. There you go. If people do that, then we have to go ahead and readjust where we're at, but those still will close and we'll still get that done. And then the second one with down payment assistance, super important. We're still doing down payment assistance. They just have to have a 660 minimum credit score. I don't know what your guidelines are in Arizona, which I could definitely find out for you. That's not a problem because we're in Arizona. We have a lot of licensed loan officers in Arizona as well. Now, as far as for Florida, as for the down payment, so you guys understand what down payment assistance is. All we do is we supply a commitment, and then we send it out to the state of Florida so it could clear audits. Okay, so as long as the state of Florida is still providing the money to the lender, to the deal, we're still going to be fine. That hasn't changed. The only thing that changed was the credit scores that went up to 660. Normally was 640, but the bank is changing the scores across the board to 660. Answer your question?
Yes, thank you. Definitely helps.
More than welcome.
All right. So,
Oh, what about refinancing? Hold on, there's a question about refinancing.
oh, yeah.
The best time to refi right now, 100%. Who's Teresa? Did we just talk to Teresa?
I think the question is more along the lines of like, what are the guidelines? Are there any changes? And there really aren't. So basically the same, you're going to qualify for a refinance the exact same way that you would for a purchase. So it all, it all falls into the same kind of categories there. So basically same thing that RJ has been talking about as far as purchases go.
Yeah. So refi, same thing as purchases. It's just a little bit easier because you don't have to deal with the listing agent on the other side, and you don't have to deal with somebody else buying a home or whatever the case is. It's the same exact thing. Best time to refi right now, because I would say probably 3 months ago, the rates were low to mid 4s. Rates right now are low, mid 3s, and you're getting rid of mortgage insurance. People are cutting their terms and the payment's only going up like $100. A lot of people are cashing out refinances right now and investing into the stock market if you have a very savvy buyer. These are things that a lot of the equities 3 months ago to now, are perfect in line with what people are doing. If you have a pulse, if they have somewhat of good credit, 660 above, of course, refinancing is a no-brainer compared to what it was. Right now, we're fine. Last week, about 2 weeks ago, we had a big change and a big influx. 1 minute was 3.2, the next day was 4.4. The reason that is because the stock market was going down, and then the the interest rate has to do with the mortgage-backed securities. So the Feds stepped in and they bought a lot. And this is great information, so you guys could go ahead and relate to your clients if they ever ask you. If you guys are building rapport and you guys want to really get into your client and have that referral-based business, so you guys have an understanding. Just so you guys know, there's going to be more news come out where the Feds cut interest rates back down to 0. And the first people that they're going to call is you and say, hey, is my interest rate going to be 0? No, it doesn't work that way. Fed rates are not, that has nothing to do with the interest rate of the mortgage. That's backed by mortgage-backed securities. And the Feds bought billions of dollars. It was the biggest buy that they bought $32 billion of mortgage-backed securities, which drives the interest rate. Rates are going to continue to be low for years because we have to reboost the economy.
Got it. Thank you. Bethany, do you have any questions?
So we just wanted to know if anybody right now has had any deals that have fallen through due to the financing not going through. I know one of me and Lily's mutual friends, Kayla, actually sent over to me a deal that fell through because it was with Bank of America, and the borrower in this. So Kayla's the seller, and she's trying to steal for her seller. Oh, Kayla's the seller's agent, sorry. And so she's trying to rescue the deal for her seller. Borrower's income actually changed the structure. She used to be commission and tips. Now she's getting like an average of the past 4 weeks. So, all right. So I see Yomari says, I had a buyer that the builder went bankrupt and canceled everything. That's insane. What happened with your borrower's down payment there and security deposit?
Just to touch bases a little bit too, today I'm on the verge of losing a deal because I have a foreign national buyer. We still have 45 days, but nobody is doing foreign national loans right now. So, and that's huge here in Florida, because we have so many international and people and foreign buyers, wanting to invest here, and they still want to, and they still have the money to do so, but there are just no programs right now available.
No, 100%. It's scary. It really is scary. Listen, we just got to go ahead and continue to do what we're doing. Make sure that the people in your corner, the people behind you that's actually supporting you, know what they're doing, know what they're talking. Remember, these are your referrals, okay? Again, we don't want to waste anybody's time. We don't want somebody to fall in love with a house and then later on it falls apart. Okay. Now guidelines are changing every hour. These were the major ones that did happen. Again, we just have to strap on, move forward, continue what you're doing, and try to prospect as best as you can, you know, be positive, be like an iceberg, you know, cool,
RJ.
collected. Yeah.
How can we prepare and educate our clients about the new changes without alarming them? And what are the pros and cons of getting a loan in a time like this?
Okay, so pros and cons. So it depends on your buyer. If they qualify for a loan right now, the pros are all over the place. So you're going to have a lower rate. You know, if credit is good, then you won't have to worry about origination charges. Most sellers are desperate right now. If you have somebody on the market and 3 deals fell through, or even 1 deal fell through, their psychological is like, oh my God, I'm trying to sell a home during a pandemic. What am I going to go ahead and do? Right? The next thing, you have all of the negotiation powers. You have the buying powers. We anticipate that and it's only so right, that the prices of homes are going to go ahead and adjust. I don't think that it's going to go higher. I definitely think it's going to be a decrease. I don't know what the actual percentage will be, but we have all of the buying power right now. That's the pros. Okay. Now the cons, I really don't see a lot of cons. If they could support it, if they still have a job, if they have the down payment money and they're well off, then it's all pros. Refinancing is the same thing. That was the pros and cons. What was the other question?
My other question was,
oh, how do you educate your clients?
educate our clients, and how can we, you know, partner with you guys? What resources can we use?
So here's the thing with that, right? So your clients are always going to build rapport with you. You're going to meet their kids. You're going to, you know, you're going to see them everywhere. You're going to show them 3 or 4 houses. They're going to tell you every single thing about their lives. It's impossible for me to build the same rapport that you guys do, because I'm behind a computer and I'm over the phone. I don't see them as much as you guys do, right? We have to be very, very, very conscious of that. 3-way texts, get on a 3-way phone call. Make sure your loan officer is available. Make sure that we're actually providing the right information. If you don't feel confident with your loan officer, you know, actually doing the deal, and something seems off, or they don't know where the guideline changes are, or they don't know, and you're like, well, what is going on? This is the time to really reevaluate your referral partners. This is the time to really know who's behind you and who's backing you and who got your back. Okay. The best way to do that is just communication. I mean, if I were you guys, I would go ahead and set up a little template or whatever the case is. If you guys want, I could provide you the updates accordingly, how it comes out, and then you send it out to all your prospective clients. So whatever clients, if you have 3 or 4, boom, I'm going to send out a text message. If it applies to your client, beautiful. You know, then we could get on a 3-way phone call. If it doesn't, then, you know, you don't even have to send them anything, because if they're 800 credit score and they make $400,000 a year, nothing's really going to affect them. They could still buy and they could still do whatever they need to do. But if you have a 660, you know, credit score where they're looking for down payment assistance, you know, trying to go ahead and get them on the contract as soon as possible is probably the best way to go. If they're ready to go, find them a house as ASAP, so that way it doesn't change to like 680 if this gets worse.
Got it. Bethany, do you have any questions?
I have a question.
Whoa.
Hey, RJ.
Hey, Lily.
So unemployment is through the roof, furlough, all this, everything. Like, I know personally a lot of people that have been like temporarily like laid off or temporarily put on unemployment or furlough or whatever. They're going back to work right now. Is there a program or is there something in place for those people? Like if they were in the process of buying and for whatever, obviously because of this, they kind of got put on hold with work. But
So
they're
this-
still getting income. They're still getting the same income, but they're
This is a
Does not-
constant, this is probably one of the biggest constant, and I have to be very careful about how I say this, especially on video. This is the biggest issue that we have getting deals to close. Okay. So these are the major adjustments that we have done. We have become a little bit lenient when it comes to newer pay stubs. Okay. As far as if they do become furloughed or if they do, we've become we have to adjust just like everybody else has to adjust. Now, what I can say is for verification of employment and verification of income, we're getting it from the employers, right? We have to verify 5 days before we actually close that they're still currently employed, okay? I have to be very careful on how I answer this because I don't want to give you guys, I don't want to give you guys the wrong information on that. It is case-by-case scenario, and it depends on what they actually do, okay? Especially if they, for example, if they get a pay stub and you're on the process and a pay stub is 2 weeks ago and they're closing and they just got furloughed, it's a different scenario than if somebody got furloughed a month and a half ago, or they're going to get furloughed after they close. It's just case-by-case scenario, and we have to take each deal accordingly onto where it's at, okay? But I will say this, the verification of employment that we're actually doing is 5 days. It was 10, now they're doing 5 because it's such a rapid change when it comes to somebody actually losing their job, right? It could be from 1 minute to the next. You know, I just had a friend that just told me everything was fine today, and yesterday, and today she's fired. So, you know, you have to take that case-by-case scenario when it comes to that. But we are being very lenient with the last pay stub that they got. Makes sense? As long as we could verify, if we could verify a lot of the stuff, we are being lenient. I just don't, that's a constant change in guidelines when it comes, and it's an hour-by-hour change.
And if not, would you say that the best thing to do is to get an extension? Or
yeah, so we're actually extending out until they get their jobs back. Yeah, we'll extend out and stuff like that. We're actually doing 90-day. We're trying to anyway. I have to say it like that. We're trying to do 90-day locks, right? So nothing changes. 90-day, the interest rate stays the same. The deal will still get approved. We'll get in there. We're just going to be pending, you know, them going back to work and then us verifying it back through a phone call or our systems internally.
That's good. I want to know, has anybody on this call had any real life experiences, or maybe you're in that closing, trying to close right now? Because for me, I had a closing today, but luckily I got so lucky it was cash. So, and then the last deal that I closed was financing. It was actually through Freedom. And let me tell you, I was so scared that it wasn't going to close. And I don't know what's happening on the back end, but we made it happen. So I have nothing but good things to say now, because that's the last finance deal that I had, and we closed.
Listen, I will say this, as far as the operational staff, when it comes to, you know, processors and underwriters, they're super it's impossible. They're only one person. They have 50. We went through a refi boom, just so you guys understand what we went through. A refi boom, a pandemic, and them getting sent home to work from home. Remember, all of our systems are all secure. We have to make sure our client's information is secure.
Let me tell you what happened. There was a processor. My company needed a loan commitment signed by this deadline, and they kept asking for it. The processor responded and was like, "We're so sorry, but the loan commitment is the last of our worries. We're closing tomorrow. Just take the closing." And I remember saying to myself, I called my office. I'm like, "Can y'all chill? Like, we're closing tomorrow. Forget the freaking loan commitment. We'll get it later." Like, it was crazy. Everybody was losing, but they held it together to make things happen. It was like in the middle of when they sent everybody home. So there was like a radio silent day, but then everybody got on their home computer and just started banging it out. So has anybody else had any crazy experiences happen? I mean, I feel like a lot of the time we learn through each other's experiences, or maybe you're dealing with something right now. Is anybody under contract right now and worried about not closing?
For me, I think my biggest concern is just how long this is going to be, right? Like, I feel like everybody is on the same boat. When it comes to like Argentina, FHA conventional is just like regular loans. It's a little bit more normal. However, you know, even the credit score changed. And I did have a question for RJ, because you said that now for a higher origination cost. So normally, you know, the closing cost or what, 3 to 4% average, if you want to say, but what are these origination costs entail, and how much more can they see or bump up the closing cost?
I think we lost RJ there.
After that,
So you were, I think we lost him. You were concerned about whether or not the closing costs were going to be altered in any way?
yeah. My question is, that was RJ, by the way. The call dropped. He says he's joining. Let's see if he can join real quick, and then that way I'll ask it again.
Yeah.
In case he's up here. Let me see. Someone's TV is super loud. Yeah, somebody's watching TV and it's loud in the background.
Sorry about that.
RJ, so RJ, my question was, because you mentioned earlier that now there's like higher origination costs for certain type of loan. We know like normally closing costs are in between 3 to 4% or whatever, you on average. How much more can this origination cost boost the closing costs, and what do they really entail? What are these origination costs?
So I will say this, what we're doing now, just to go ahead and protect ourselves, is we're locking right when we get a loan number. So right when we get the executed contract, okay, we don't want a fluctuation like we did. If your client is okay with the rate where it's at and the payment where it's at, we're locking right then and there, and it will tell us our origination charge right there. We're not quoting something outrageous. The biggest origination charges difference are on FHA deals because it's government backed. Okay. When you have a government backed deal like that, they tack on, it's because of servicing the paper. So we went through the worst of it. We went through that big fluctuation that everybody was talking about. Oh my God, the rate skyrocketed. That people that were under contract there went through really, it kind of leveled out because the feds got involved. So the rates are leveled out. Origination charges are fine right now. You will know up front how much you would actually have to have. Those deals that we actually locked, okay, and then the everything changed. Can you guys still see me?
Yeah, I see you.
Yes, thank you.
Then we would it was just like a week where the origination charges were so crazy. Right now you guys are fine. Whatever we quote you on the rate is not going to be substantial enough to really ding where you guys are asking for a lot of closing costs additional. Some realtors even went in and provided some of their commission, stuff like that, just to get the deal to close because we're going through a pandemic. But you guys will be fine. Again, it all depends on how we're presenting the information in the pre-approval stage. You guys have to make sure that whoever is quoting your clients on their payment, their interest rate, their down payment, and their closing costs explains very thoroughly on what could happen, okay? And setting the proper expectations. Listen, we got to close this deal as quickly as possible. I need your documents, and these are estimated, on a worst case scenario, how much money you will need. And this includes this amount of origination, but it's not that high. Again, it's case by case scenario because you have to look at their credit score. That has a lot to do with it as well.
Okay, but normally they're not any more higher than they were before.
No, we went through the worst. They were literally for a 700 credit score. It was like $6,000 to get 3.99. It was really bad. Now it's not even there. It leveled out. The origination chart is not that crazy.
Is it back to how it used to be, or still a little
it's back to I won't say it's back to normal because we're still not in normal times, but it's close to it to where it's not I called it a jaded interest rate because they were scared. So they tacked on extra fees just because of what was happening. And that's just my personal opinion. That's not what really is, but the pricing was off, it was, the interest rates were off.
Got it. Well, thank you so much for joining.
Wait, I have a question. Sorry.
Yeah.
Okay. So I work with investors. Most of them are cash, but most, I would say 50% do use hard money. So you're saying hard money is completely out. Is there
Unless you have somebody, please tell me.
wait, what do you mean? No, I mean like used to, like 50% are cash, 50% were hard money. So now you're saying that hard money is essentially out. Is there another option for them at the moment, or is everything literally just like on a standstill?
Now, yeah, so everything is on a standstill. I would say for the next 2 or 3 months, you won't see a lot of your investors. They will either go ahead and find private money. Yeah, they will have to find private money, which, I don't know too many people that will do that. But, and the private money is basically just going to purchase the house cash, and then they will, set up a different contract outside of what it is. But we've had constant conversation with this, especially me and my VP. There is no hard money, foreign national, all these people that provided this money for that, they're done. They're literally just, I'm going to hold off. It's scary because they can't, it's interest only. The interest rate is so high. It's a very scary time for them. So they're like,
actually, we had a deal fall through because it was hard money a couple weeks ago, but thankfully we were able to find a cash buyer and they were able to close within 2 days.
Yeah, cash is king right now, for sure.
For sure. And so unless you do have like a private lender, like a person, there's like people that are like.
I do have a hard money lender that's still lending right now.
I have private money and I have hard money lenders who still lending.
Nina and Bethany, please share the contact so
I'll write it in the chat. I'll write her contact number. She just literally lended.
It's just private money lenders that are like, it's up to the criteria and it's their private money. So if they want to lend it, they will, as long as it goes with their guidelines. So if anybody do have those resources for all the.
I'm gonna put it in the chat over here so you can have the contact number.
Exactly, because we need some options, for people that are still in need of non-conventional loans that are just not longer backed by banks. Basically, what happened really is like banks that used to do this type of loans, they're not doing them no more. But if it's a private investor, private money, you can still get somebody to do it. So if you do have contacts, Lena and Bethany, please write it here and we will send them to you guys. By the way, I don't know if anybody has another question or would like to say something to add to the chat.
Yeah, Gabby, I just wanted to remind everyone that this is something that is kind of what we would call temporary, just because people are not going to be unemployed forever. So, for most of your buyers, you can still keep them on the pipeline. If they right now don't have a 640, what me and RJ are doing is we're trying to run simulators and find out how we can get them to 640 or 660. You still have the help with down payment assistance, just that our company overlay is a 660. I'm sure other companies have a little bit higher. So those are just kind of things that you can keep in mind so that you don't have to turn buyers away. You can keep them in your pipeline, keep them hooked. And, just remind them and remind yourself that it's really just a temporary pause in lending and that we will return to a more normal standard of lending again.
Are you guys doing the rapid credit score things? Or no? Yes, still going on?
Yeah. Mm-hmm.
Now they're backed up as well. So that goes into a lot of the turn times as well. So you guys understand what happens when you do a rapid rescore. Let's say, for example, I pull somebody, their credit score comes out at 652 and I need a 660. And what I need to do is have them pay off one credit card to get above a 660. I have them pay it off. They send me the statement. We send it to what's called factual data, which goes into the actual credit report, updates the score, and then they repull it. Just so you guys know, they're about 2 to 3 weeks behind as well. So I just had a file that we couldn't do anything until I got back the rescore. If you're removing disputes, if you're taking out some kind of collections or whatever the case is to pop the score. Yes, we do the rapid rescore. It's just, it takes a little bit. Everybody's a little bit backed up right now. But yes, we do that. We will send you exactly what the score will be. and then you'll be fine. We'll still go on the process. It just needs to go ahead and go through certain channels in order to go ahead and close the deal. So you can still go on the contract with that idea, like, listen, we have to pop the score. If we don't pop the score, we don't have anything.
Got it. So it's still possible. But
It's still possible, 100%.
I'm working on 2 FHA deals now, and I'm doing 45-day closings on both. And one of them is contributing, the seller's contributing 3% towards closing costs, because you just said 6%, right? It was the max?
That's the max, yeah.
And then they have like a 620 credit score. So now the lender is talking about they got to with the credit. That's why I just asked the rapid review score. And that was the phone call I was just on, was discussing that. So I guess within the 45-day period, this can get solved.
Yeah, so we will have to go ahead and see what is the score. If you're scoring 2 or 3 things, what is, I have to see the credit to be able to go ahead and tell you. 40-point jump is possible. We've jumped at 100 points. It just depends on, does he have a lot of debt?
I gotta see, yeah.
Yeah, it's case by case scenario, but you can still do it. We'll just pop the score. You just can't move it to another milestone until that score is there. Does that make sense?
Yeah.
So it's just in standstill. We really have to look at it and pop the score.
All right. You know what? There's some hope here, though. You know, it's not a complete standstill. It's just a little bit of a delay.
It is for sure. 100%.
I have a question or 2.
Yeah.
Well, first, what company are you guys with? Because I didn't hear the company. And 2,
Freedom
if you
Mortgage.
guys, Freedom, okay. And are you guys accepting electronic signatures right now? Or are you guys still requiring wet signatures?
Great question. Actually, that's state by state when it comes to virtual notaries. We just implemented that in Florida. So I could give you a little bit more information because it has to do with the title company. Each title company has a specific insurance that they have to go ahead and have when you're doing a virtual notary or virtual signing or virtual closings. If that title company is not insured, there's always a clause in their insurance. If that insurance is, if they don't have the insurance, they can't even do it. So it really depends on the actual title company that you're actually closing, whether it's on the listing side or on the buying side. But yes, we do it, and it's per state. So we do the virtual signing, but it has to be with the specific title company. We just implemented that. So yeah, that's true. That's a great question, actually. Most people, you know, some people are actually closing outside. We actually have a little funny group chat. Some people were slipping the actual papers through the crack of the window in the car.
Drive-through closings.
Yeah, it was crazy. I was like, wow, listen, whatever we got to do to go ahead and get the deal done, it is what it is. You know what I'm saying?
I have a closing on Saturday, and they told me I cannot attend. So they were like, not realtors allowed.
Yeah.
I was like, oh, I mean, it is what it is. So I sent the present to my client beforehand, since I'm not going to be able to attend. But yes, that's what they're doing. I was going to say that I had another closing last month, and the same day of the closing, they were checking my client's work and to see if he was employed and like the same day of the closing. So be careful with that too. I have 2 more closings coming up, and these are FHA as well, but thank God, both of my clients have 700 and 690. So hopefully they behave and they don't do nothing stupid, so it doesn't go down. But so far, so good. As far as the investment side, their buyers are not, like, they're pulling out, especially the investor booklet. They're waiting for at least 30 more days or 60 to start moving their money. So they're doing pretty much refinancing, cash out, and waiting to see where are they going to be investing this money.
Hi, Lena. You look beautiful. Thank you for the update. Yes, definitely.
Thank you. I'm here with we do homework.
Yes.
Say hi, Mia.
Yeah, that's great. So yeah.
Hi, Mia.
Hi.
Definitely, like RJ say, it's a lot of like case by case right now, it really depends on each file that you guys get, but at least you know the guidelines now of like the new guidelines. Like, of course, if you're already under contract and the client has already been pre-approved, they'll probably honor whatever was established. Sometimes, I don't know.
Yeah.
RJ,
And also, like, we just have to pivot, and like we keep saying this, there are still markets and people that you can market to in this time.
Yeah.
And I remember Tessa brought up a point. Why don't you share with us, Tessa, on how we can market and who we can market to in these times? Because, you know, maybe your usual clientele, you can't really sell to them, but there are still people who are buying, because I'm still getting a lot of activity. It's not what I thought I would be dealing with, but I'm working on an investment side now of moving some deals.
Mm-hmm. Yeah, I think it's super important to think about where you can shift. Like you were saying, it is all about pivoting. That's what I tell people all the time, no matter what industry they're in, honestly, but especially for us in real estate, is there are solutions out there. And this is relatively, you know, short term. Like obviously this is going to have long-term reciprocal effects on what's going on. But if you use this time to your advantage to learn a new skill set or add some additional knowledge to your knowledge base about how to serve investors in the best way possible, or how you can create these kind of opportunities or find loopholes or find opportunities for your clients that you still have active in the market, then there's still a lot to be done. So I have kind of like three main people that I'm still focusing on marketing to. That first one, like I said, we in Arizona still do have all of our down payment assistance programs. And honestly, we have a lot of our programs still available. So I think it's important to connect with like your lender specifically and find out what some of those programs look like, and work together to create some specialized marketing around specific programs and cater to those people exclusively. Because even things that have been available for a long time, like this is something I say to do all the time, but especially now more than ever, is create marketing around specific programs, create videos, like hop on a Zoom and do a side-by-side video with your lender talking about it, create some infographics, create this content that people can easily see what options are still available for them. And then I would really clearly paint the pictures of what it looks like to buy now versus buying, you know, 3 months ago, what it looks like to buy now versus buying 3 months in the future, like kind of talking and giving these comparisons about what that can look like and what some of the advantages or disadvantages are. Because the reality is people are always going to have to move. Everybody needs a house at some point, whether they're renting, buying, selling, whatever. You need to just find those people and create the solutions for them. The second one, of course, is investors. Cash is obviously more powerful now than ever. Find these investment groups. I just connected with a group up in Idaho. I'm in Oregon, remember? This was connected up in Idaho just because I literally spend so much of my time networking and connecting with people all over. I believe every person you come in contact with, there's an opportunity for business with them, whether it is immediate or whether it's 50 years down the road. There's opportunity in every single relationship. You just have to find a way to extract it. And for me, the way to do that is to connect and have these relationships, see what kind of people I can plug. Almost any time that I have a conversation with somebody, I'm instantly thinking about who can I connect them with? Who is somebody that I can introduce them to that they would benefit from? And so I got connected with this guy up in Idaho who actually manages like a big group of investors. It's these super wealthy people up in Eastern Idaho that have this like investment club, and they've been interested in purchasing a huge amount of properties down in Arizona and creating like a third-party seller financing options because they see that this is going to be something that they'll have a lot of opportunity for. So now they're talking about buying like up to 100, 150 properties, and they're figuring out the best way to do that. And that's just because of a conversation that I had with somebody. I made a connection with him that was valuable, and he did the same for me. So going out there and trying to connect with people, finding a way to add value to different investment clubs, different kinds of investors or people like that would be great people to connect with. And then the last thing I would say is like people who are in these relatively recession-proof jobs. Another connection that I have is through government contracted workers, like the aerospace companies. We have a lot of hubs here in Arizona. They're all on mandatory overtime until June 31st. So basically they're like guaranteed to have their jobs through then, and they've all got pay raises and they're all getting more work and they're all staying really stable And 2 of them right now are talking about wanting to go and buy property. So those are just kind of like the things to think about, is what are the people that aren't at the risk of losing their jobs or aren't in these more unstable positions. You may just have to shift your approach as to who you're communicating with and how you're communicating with them. But again, just remembering that these opportunities are out there. You just have to maybe think about shifting the way that you've communicated to people in the past, come at it a little bit of a new approach, and be a problem solver for your community instead of just thinking like, oh, this sucks, or this can't happen, or this went away. Think about what opportunities have been created in its place.
Absolutely.
Just to add something up to that, I don't know if you guys are aware, but NAR is offering some training for free right now. Like some of the trainings they usually have for like $100, $200, $300 is actually, they're actually free. So I'm definitely taking advantage of that. That's what I was doing all weekend. So take advantage of
the link here so we can share it with everybody. Do you have the link?
I will. I think I have it. Let me see if I can. If I don't find it, I will send it to Gabby, and Gabby can send it to everybody.
Yeah. Thank you.
Okay, awesome.
Thank you. And also, by the way, I wanted to mention that if you guys don't have health insurance, or even if you do, but you don't want to go to the doctor, the Florida Realtors had did a deal with Teledoc. So telehealth, Teledoc, I don't know what the name is, but I'll send you the link as well. They have 2 months for free. So basically you can call in and tell them your symptoms. They'll prescribe you over the phone. You can go get the prescription at the pharmacy. All of this is for free. And then later on, if you want to continue using the same system or the same program, it's only $7 a month additionally. So they did this for us, Florida Realtors. So if you are a Florida Realtor, take advantage of all of these great things that are also, you know, good for us. Not just the bad, but the good as well. So I don't know if anybody wants to say anything. Banna posted a link here. Banna, is this a link for the education?
So ePro is a designation, and then now it's for free. NAR is offering that. I think it's a good time to take advantage of that. I mean, not to like go back to what we talked about last week, but we just did like an excellent webinar today, the Miami YPN. It was like an hour long, 150 participants, and it was genius. Like we just talked about amazing things. So perhaps, NAR, YPN, your association, to see what other free resources are out there.
Exactly. So stay relevant, stay educated. Try to shift your mind, and just like Tessa was saying, you know, just shift the focus of, okay, maybe you were used to working only with foreign buyers, for example, that right now the programs are a little stalled. Shift that mindset and see, okay, now where's the opportunity? Where can I look and who can I target now? She just gave you an amazing 3 examples of who you can actually go after and target. You can create ads, you can actually not even spend money, but if you know somebody in that circle, hit them up directly, you know, just use this time wisely, and you will see your growth flourish. Not only now, but then it's gonna really thrive when you get out of this. So make sure that you're being productive, that you're doing the most that you can. And let me see, anybody wants to say anything else? Thank you, Lena. Lena posted the link here for the education for telehealth. Thank you, Lena, for that. Banna posted her Ocean Sky Media lead generation class. If you guys want to learn about lead generation, I know Bethany is also coming up with something really cool.
Yeah, I'll post my link for you guys as well. I'm launching it's basically a 90-day program, and it's more along the lines of like entrepreneurship and how to take like those ideas that maybe you've been working on and that side business that you've been working on and really put the steps into place. You can get that going. Because real estate is always going to be my number one, but at the end of the day, like now is the time to just diversify. If there was something that you wanted to learn that could potentially make you money, I listened to a podcast, which I would probably put in here for you guys as well. And in the podcast, it talked about a lot of people are going to go out of business in this time. RJ was saying a lot of small banks are going to close. A lot of people are going to, go through some serious struggles. But there's going to be a lot of entrepreneurs birthed in this time, and there's going to be a lot of millionaires made, right? They're going to take those things, they capitalize on, this market, this atmosphere, they pivot, and they create something that's going to last a lifetime. So I encourage us all to be thinking like that, thinking forward. What can you create now that someone's going to need in 3 months? Or what can you work on now that you can launch and you can sell? And if you don't have anything, who can you team up with? I teamed up with my girlfriend who created this book. She owns a wholesaling company. She created a book and a course, but she's actually not even in that sector anymore. She's so consumed by her wholesale company and so busy that she wasn't able to do a proper launch. And she really wasn't able to like host this like weekly Zoom call. So I told her, I was like, I created Females to Profit. Why don't I team up with you? Why don't I launch it with you? I take the girls through it and guide them. So I got the book and I did the course myself. And that way we like teamed up. So it's like, it's also that time to collaborate. Like, who can you team up with in a time like this where you can both use what you're good at and make something out of it, So I would just encourage everybody to be thinking in that mindset as well. Like, if we're slow, then what else can you be doing that can potentially bring you money or opportunity or relationships, building those relationships now so that in 2 or 3 months, you're already working on something that you can release when things start picking up and going back to normal. Well, I don't know about normal, but when they're changed forever, we're witnessing history being made, guys. Like, they're going to talk about what we went through in history books years to come. So that's a big deal. We could let that scare us, or we could just let that empower us to say, like, what we do now is going to be made in history. How can we be the best that we can be, and how can we come out of this thriving,
Yes. Definitely. Thank you for that, Bethany. I agree.
Why don't, Gabby, send everybody an email with the links to all the courses, Banna's course, my course, the certification. That way everybody can have.
We're going to list all the resources. So I will send an email out this week with all the resources that we just mentioned. Also, Tessa has some stuff going on. If you guys want to take advantage of one of her courses, of her online classes, you can also do that. Or programs. So we have a lot of resources for you girls to stay busy, and like make a better person or a better business out of all of this. We can survive this, we can take anything that comes our way, okay? So make sure that if you have not given us your email before, then please write it on the chat box so that we make sure. Please write your name, your email, and if you want your phone number, so that we can add you to our list and we can send you all the resources of the things that we've been talking about. And we can also send you the email with the link so that you can join next week's call. And please feel free to give us any topics, recommendations of things that you guys want to talk about or hear about next week. I don't know what's relevant to you, if what we've been talking about is valuable. I've heard great things, but we will also want to welcome any topics that you guys want to hear about or you want to learn from. Feel free to make any suggestions. Does anybody else have anything to say?
It was so nice seeing all your beautiful faces again.
Yes, I'm so happy that at least I get to see you all once a week. Thank you for tuning in again with the Downtime Divas. And we will see you next week, okay?
Okay.
All right, bye.
Bye, everyone.
Bye, guys.
Bye, guys.
Bye.